Sasfin Wealth's Robert Towell joins us now for a full look into the day that was in markets. Rob, thanks so much for your time today. Let's get straight into it, right? Tons of local news coming out. Cell C making its market debut today. It opened below the offer price, but managed to tick higher throughout the day. Thoughts on that? Any appetite when it comes to a new telcos player on the JSE?
I think there will be appetite for it. I think its listing price was 26.50 and it closed at about 27.50. It was up about 3.5% from that listing price, so not a bad start. I think the market is a little bit uneasy about whether they can continue growing as they have been now that they're free of the debt, and if they can, now that they're free of the debt from the listing, will they be able to get growth? So I think, once they give a set of earnings away from being locked up within Blue Telecoms and Blue Label, then we'll see more appetite come towards them. But I think, if you take a look at the prospectus, they're free cash flow positive, the business is growing, they're relatively low capital now, capital intensive, they don't own their towers.
Yeah.
So there is an ability here for this company to generate a lot of free cash flow and grow at this point. So I think that the market will be very interested in it. I don't think they'll necessarily run for it right now, but I think after a first set of earnings, and they're positive again, and they're confident that it's the same as the prospectus and growing forward, you'll start to see some money flow into that sector. I think we've only had MTN, Vodacom, very big telecoms on our bourse for a very long time, and Telkom's been on a recovery path. So I think a fourth telecom there is positive at the moment, and I think the market will start to look at it, but maybe in 3 to 6 months' time, you'll start to see more volume come through. Not too much volume went through today on the share.
So more of a wait-and-see approach for now. All right, let's look at what's playing out in the private healthcare sector. Life's profits under pressure due to costs linked to the sale of the Life molecular imaging business. But operationally, things seem good, right?
Yes, operationally, a very good set of numbers. They also paid a special dividend from that sale. So, that came out, and shareholders were rewarded with a really handsome special dividend there. So, if you take that into account, they're operationally now, they're looking relatively solid. They do show that they will have some growth. They said they will start one more acute hospital, and they're going to increase their beds as well. So, all the hospital groups are doing relatively well in South Africa. They weathered the storm of COVID and thereafter. They haven't had a lot of capital expenditure into those sectors, into the South African market. They haven't been putting up new hospitals everywhere. So it is good to see that Life Healthcare is going to add a new hospital to the group. And operationally, very good. I think Netcare's earnings were also relatively firm.
Yes.
I think nursing is still a problem. And if they can get the nursing right and skilled nurses, that also helps the sector. But operationally, very good. They've generally been a slightly cheaper option on the private healthcare sector. If you go into to a Life Healthcare, the medical aids prefer you to go to a Life Healthcare. So they've got a really good model and really good relationships with all of the life insurance companies and the medical companies. So really good business to have, and it's not something that you shouldn't not look at. I think you can have it in your portfolio. You will get dividends and some small growth.
All right, and let's look at a smaller company on the JSE, Towell, delivering a rise in profit. It was interesting to see that, on the land-based side, when it comes to those casinos, they're still under pressure. Of course, on online betting, we are seeing more growth coming through. Also, very interesting to see that they're betting on that online space, planning to appoint a new CEO on that front. Just your analysis on those numbers, and I guess just the online gambling space as a whole. They're betting on, an industry that could be in for tight regulation.
I think there's been a lot of talk in the newspapers and media around the problems that online gambling is causing. So yes, it could get highly regulated going forward. But I think that's where growth is. And I think, you saw it from COVID, from online shopping, how online shopping is taken away from the standard shopping as well.
Yeah.
Doesn't mean that standard shopping, etc., disappears. And this is the same with the casinos. Normal casinos will still be there, but you're going to have to add something to the casino. It's not going to just be gambling. You're going to have some other experiences at the venue. whether it's live experiences, concerts, etc., or some other type of experience that brings people into the casino. So relatively weak casino numbers on the land-based casinos. Very good, solid growth in the online betting portion, but it's quite a small portion for them at this stage. So they're going to have to up and ramp up that betting. They're a little bit behind the market on the online side. So I think relatively decent set of numbers, and they've got potential growth. But the problem there is that they've got a lot of debt. They've brought their debt down,
Yeah.
but they're sitting. Their market cap's about I think 7.3 billion, and they're sitting with about 6.8 billion in debt. So I think that's also why you saw the dividend halve, and it came down because they're down. They're trying to get rid of that debt. A little bit of interest rate relief is helping them there, but I think you want to see the debt come down. And can they bring the debt down while they're trying to grow online betting? So that'll be interesting to see if they can do that, grow online betting at the same time, bring down the debt. Then I think it's something you can look at now, but a bit of caution with how much debt they're carrying on the balance sheet.
Really a tough balancing act there where you're trying to invest but not invest too much because you have debt. All right, let's move over to your stock pick. Where are you seeing opportunity at the moment?
So I still think that South African banks give an opportunity to investors at this stage. They're all paying relatively good dividends, 6 to 7%, and they've got a growth profile, between 6 and 7%. So you're getting double-digit return growth from the banks. In that sector, we really like FirstRand at this stage. They do have a slight overhang on a regulatory fine in the UK,
Yes.
but barring that fine, they're very well positioned, and they've got the ability to grow into the digital banking space as well. And they bought into Optasia, which is a digital banking platform. They bought 20% there, so they're not going to just stand still and let the incumbents take over the banking. So we think that SA banking is still a place where you can invest, and we like FirstRand at these levels.
And I mean, it's down 2%, so presents a nice buying opportunity today. All right, Rob, thanks so much for your time and sharing your insights with us today. That was Rob Towell from Sasfin Wealth.